When the S&P hit the recent record high, the major buyer was buybacks. Others were selling. This seems to be the story for 2019, so let's take a look. Recently, Bloomberg's Michael Reagan wrote an article titled, "The U.S. Stock Market Can't Stop, Won't Stop Its Endless Rally." In the article, Mr. Reagan made a very interesting statement, which was also very accurate and to the point, and that is, regular investors are leaving. This appears to be the story thus far in 2019, not the relentless artificial melt-up in the market on the back of the dovish reversal by central banks and the daily U.S.-China trade talk optimism, which may never happen. So even as the S&P 500 recently hit new all-time highs, Bank of America's strategist Jill Carey Hall wrote last week that when the S&P 500 was up 0.2%, virtually everyone was selling stocks. This includes selling by institutional clients, hedge funds, and private clients. All were sellers at the recent highs in equities, and yet, even with all of the selling, somehow the S&P hit a new all-time high. How can that be, you may ask? The answer is corporate buybacks ramped up. As Bank of America elaborates, buying was led by corporate buybacks as all other groups, hedge funds, institutional, and retail clients, were net sellers of equities for the second consecutive week. This means that for one more week, traditional investors were, as Reagan noted in the Bloomberg article, boycotting stocks and were delighted to sell stocks back to the companies that were once again aggressively buying back their own stock with the S&P hitting all-time highs. As this chart here shows, Bank of America reported that since about February of this year, clients were net sellers of single stocks, which is the upper yellow line in the chart. However, clients continued to buy ETFs. But if everyone else was selling, how did buybacks offset the selling avalanche? Simple, according to BofA's stock repurchase desk. Buybacks last week were their highest since early February. They tend to be strong during earnings season and seasonally peak in, say, mid-late May. Buybacks year to date are plus 20% year over year, though the growth rate continues to decline. While this means that we once and for all can forget about the recurring lie of a buyback blackout period, in reality, the blackout applies only to a very narrow subset of stock repurchases. It also means that we have reached a level of market lethargy where stock buybacks are powerful enough to offset all other selling. This is an interesting dynamic in the market that can have significant positive or negative effects. So stay tuned. For today, that's ChewDog Charts. Thank you.